Welcome to the Moore Realtors Weekly St. Louis Real Estate Market Update. I'm Dennis Norman, one of the brokers at Moore, and if you'll give me a few minutes of your time, I'll bring you up to date on what's happening in the St. Louis housing market. Let's jump right in with the real estate news. Here are some of the headlines this week from stlouisrealestatenews.com, St. Louis's best local source of news and information on the St. Louis real estate market. The headlines this week included an article about an increase in home prices in June, which was the third consecutive month of price increases. This was according to the CoreLogic Home Price Index. A good article from a local mortgage banker discussing whether or not you should do a cash-in refi. The old days of a cash-out where you refinance your house and walk away with a pocket full of cash are gone. But he gives some compelling reasons for why, even if you have to bring cash to the closing on the refinance, why it may be worthwhile to do. Also includes an update on the current St. Louis mortgage interest rates. An article about how 84% of the U.S. metropolitan areas posted lower foreclosure activity in the first half of this year, which is good news. And finally, an article about pending home sales increasing in June, the second consecutive month of an increase in pending home sales, which is good. Now let's jump into some of the market stats. The first three slides I'll be showing here are market data, real time for the past week of the entire St. Louis metropolitan area, so the entire St. Louis MSA. And we'll see here on our real-time market profile, median home prices for the metro area have stayed flat this week at $184,356. Average days on market has dropped slightly to 108 days. Average asking price per foot still at $99 a foot. If we come down here to our trademarked market action index, the index is at 12, which is the same as it's been for several weeks now, which is cold, or a buyer's market. Just as a quick reminder here, on our market action index, a 30 would be a perfectly balanced market, not favoring buyers or sellers. As it increases above 30, the market's becoming hotter and becoming more of a seller's market, up to a maximum of 60. As it drops below 30, it's becoming colder, or a buyer's market, down all the way to 0. And we've been in a pretty low range here for a while. This next chart will show our market action index charted out over the past 3 years since its inception. And we can see it's bounced around here. It hit a low in the third quarter of last year, and then peaked earlier this year, and has been was pretty much on a downward trend, and then the last few weeks has been kind of bouncing around here. And this chart again for the St. Louis metropolitan area shows the median price trend. The orange line shows median home prices averaged over a 90-day period. The black line averaged over a 7-day period. So we can see what the trend has been for the past year was a steady decline, and then comes spring, a steady increase. Now the black line averaging the last 7 days is going to be quicker to show a change or a turn in that trend, and we can see that clearly a couple of weeks ago the trend started pointing downward, so we'll have to see what happens moving forward. Now these next slides I'm going to show you are for the what I call the St. Louis 5-county area. This is the core of the St. Louis market. The city of St. Louis County, St. Charles County, Jefferson County, and Franklin County. So these charts and graphs are all based upon market data for those 5 counties combined. And we can see the first one here is a chart that shows the number of sales. The blue columns just show the number of home sales, and the green line is average sales price. So we can see what's happening here, and this is for the past year. And we can see in terms of number of sales, there was a low back in the winter, which we'd expect. Steady increase into spring and summer. Dropped off some in July. Now sales data is reported after the sale actually closes, and frequently a lot of the data doesn't come in for 7 to 10 days. So since this is just August 5th, there's still sales data that's going to come in. So next week we'll get a better look at what July actually ended up at. But right now July is looking like it's going to be down Sales peaked over 2,000 sales in June, and that may very well end up being the big month. As far as average sales price, the green line here, we can see it appears to have peaked also around June and be trending downward a little bit here, still well above the 150 mark. Actually, it's probably above the 160 mark. This next chart here, this shows the median home sale prices, so the median price of the homes that sold, as well as the median number of days it took the homes to sell. This is going back to last year. The green line represents the median sales prices, and we can see again a low in the winter and then steadily a slight upward trend. Now August, it looks like it jumps, but again we're just 5 days into August, so this is good that it's pointing upward, but this I would ignore the rate of increase here. It's being affected by the fact that there's just been a few sales already reported into the system for August. The days on market, the blue line, we can see that has dropped, so as the prices have come up a little bit and we've went into spring, things have sold a little quicker, but once again we see going into August it may be trending upward. This next chart shows the same data only on just a year-to-date basis, so it's a little clearer to see what's going on here. Now this chart is this shows for the past 12 months the ratio of home sales prices to what they were listed for. So this is not a chart that's indicative of the market itself or of the value of or home prices. This is more indicative of how accurately are sellers pricing their homes, or probably to put it better, how good a job are the listing agents doing in terms of educating the sellers, bringing the sellers good market data, and then being confident enough in their knowledge and their data to stand up to a seller that wants to overprice their home and show them that that is not what their house is worth. And in this market, probably the worst thing you can do is overprice your home. A couple of years ago, or back during the boom, agents could take any overpriced listing and it didn't really matter, because if it didn't sell right away, if you wait a few months, the values were increasing fast enough where eventually the overpriced listing wasn't overpriced. Today it's just the opposite. Home prices are still, for the most part, falling. They're flat at best in most areas, so if it's overpriced to start with, every month it sits on the market it's probably overpriced a little more. So this is why sellers really need to have to be working with brokers and agents that are very informed and are professionals and will deliver the info sellers need to see, such as those brokers and agents we have at More Realtors. So we can see here the green line represents the sales price as a ratio to the original list price when the house first hit the market. Blue line is sales price to the current list price at time of sale, so after any price reductions along the way. We can see there's been a pretty big gap here, but as time has went on, it looks like sellers and listing agents are probably getting a little more realistic as these two lines are closing in. And again, I'd ignore this peak in August. That's an anomaly because we've just went into the month. But looking back at July, we can see the gap widened again. Homes are selling for about 70% of what they were originally listed at, but a little over 90% of the current list price. So the percentage of current list price steadily increased over the summer, and as was the percentage of original list price. We can see here in the last month that really dropped. Price of old listings that finally sold. This next chart's the same data, only on a year-to-date basis, and we can just see it a little more clearly. Now this chart goes back 10 years, and it shows the median list price and median sales price trend for the 5-county area over 10 years. The blue line is the median list prices, green line median sales prices. Gee, houses are always listed for more than what they're selling for. But anyway, we can see everything peaked in 06 and has been falling slightly. And again, I wouldn't pay. It's kind of hard to see what's going on here in this last year. It looks like prices have dropped more than the list prices. Let's go to this next chart, and this one shows that data for the past 12 months. And we can see that in fact over the past year, median list prices have went from about $130,000 to over $140,000, Meanwhile, the median sales prices have dropped from about 120, call it 25 or so thousand, down to about 120. So clearly these two trends are going opposite directions. Now what I've given you here is a quick snapshot of the overall St. Louis market. At More Realtors, we have the knowledge, experience, and resources to counsel you, help you interpret the data, and tell you what it means to your particular situation. We can prepare custom reports and charts for you so you can stay on top of home prices and market activity in your neighborhood or area you're interested in buying a home on. Click on the chart to see complete market data. In addition, we publish a free monthly newsletter that is packed with information, news, and resources on the St. Louis real estate market. You can sign up here on our website to receive it monthly via email, or you can click on the newsletter here and be taken to a site to sign up. And finally, my partner John Williams and myself, along with our team of dedicated real estate professionals, are here to use our experience and knowledge to help make your next real estate transaction a successful one, no matter how challenging your situation may be. Click on our photos to find out more about us. Thank you, God bless you, and I'll see you next week.